Hey folks, welcome to Monday, the 18th of April 2022. Happy Easter to everybody, of course. Hope everyone got the Easter egg they were looking for today. So we have a half day really here in Europe for trading. Obviously, European markets and the UK markets are closed today, as they were also on Friday. Um, we really came into this break with equities under quite a lot of pressure, being seen on the downside. Really, it's kind of the markets are struggling to recover any significant part of that. I'm looking at the NASDAQ, the SPOOs, and the Dow here, of course. Oil, though, however, coming into this break for Easter has done phenomenal numbers on both the last Thursday there. And indeed, again, it's pretty much holding on to the gains today. So, not much to talk about today, but we're setting up for what could be an interesting week here. And gold, of course, just about it's about 4 cents off of hitting 2,000 right now. So sure, look, let's get over and have a look at these charts here while we're at it. So NASDAQ now, you're seeing these blue areas coming onto the screen right now. Okay, so let's get over onto the NASDAQ and have a little look see at what's going on. All right, so we are now trading back within this range. Okay, the top of this range is the 16th of April 21, pretty much a year ago. And the bottom of the range would be the low of the 13th of May 21, right? And we are back within this range. And I was looking at this on Friday, all right, and we're trading in here right now. The one little thing that you would love to see to confirm this range trading is exactly what we got on the top of the hour at 6:30 last Thursday, the 14th of April. Excess pushed into that high 14,043 quarters, top of the range, and then back down below. We see this nice little trend on these hourly bars here in the NASDAQ. So, not only had it broken the trend, nice little pullback here, looking for the short. Take the short, and you're handsomely on side on that trade now. And you know what? I think we may continue to drop back through this range over the coming weeks um, on the Nasdaq, and fitting in with that bear trend, that we have. I mean, you may see the market try to struggle back up around the pivot today, but it's just not there, really, is it? Let's all be honest here. I'll be looking for this trend to break as well, get a pullback, and then short that thing down. And I think as we trade into the mid of the range, down around the S2 now, I don't think we're going to trade this whole range today at all. But I think once we come into the range, the pullbacks will be greater coming up to test, to load up on the sellers and then drive down. You got the 50 EMA starting to trail down here as well. The 10 day, the 20 EMA here as well. And you got that crossover of the 20 below the 50 there, and just lost Friday, the 8th of April. Anyway, let's not get too wrapped up in that, but I think that's what's happening on the NASDAQ. I do see us trading out in this range, and I'm not going to call it anywhere beyond that for now. So, yeah, we'll just drop this one down. We'll look at the SPOOs. Now, the SPOOs, similar sort of range to observe on the downside. The top of the range is the high of the day, 10th of May 21. Top of the range is the high of the day, 13th of July 21. So I'm just, this is just my analysis on the market. Everyone has their own different read on this, but you can see clearly so far today that the low of day supported on the top of that range, 43.60s even. And if I just kind of pop this down so you can see the 60 minutes here in the center of your screen, you can see the SPOOs right now. Taking a nice little lift back towards the 200 EMA, the 50 above there at 44.05s. Nice supports coming in. So the SPOOs does not want to trade into this range, because pretty much it knows that once we get in there, right, once we get back in this range, that generally there is a bit of supply. Well, not a bit, but quite a lot of supply. Now it's covered down through that area in 2 days, 2 consecutive days of selling before. That was, what was that, the 4th of March this year. We came down through here. So, but for now, it's well supported. So, there's that kind of divergence in that I think tech can sell down on the NASDAQ, whereas I think SPOOS is finding legs here. It's finding some foundations, finding the buyers who maybe want to take it back to at least the 100 EMA here. But do be aware that you've got the 200 EMA right here, this one here, right? You've got the 200. Actually, I might make that a bit fatter. But once you get this 50 EMA crossing down over the 200, you've got a serious problem on your hands. And the market is going to have a lot of sellers then come in, a lot of algorithmic selling, a lot of swing trading selling coming in and driving down from that point. And really, it's not going to be pretty. Similar to the technicality that we had on the Nasdaq, where you had the 100 crossing the 200, and we had a phenomenal amount of selling after that. So, well, we haven't looked back since, pretty much. So, that's the spoos. Here on the Dow, look, you've got quality names on the Dow to be respected. Here is the Dow on the weekly chart. The 50 EMA weekly supporting this market. I don't want to really call a bear market on the Dow at this time. I think there's just a lot of quality in there, a lot of dividends, a lot of big value in there. So this thing isn't going to sell down, willy nilly on the back of an Elon tweet or whatnot, So, I think we're just really settling into a consolidated period here. In the days and weeks to come, I think we're going to look at this area as decent consolidation, and dips will be bought on this thing. So I'm just kind of carefully not going to make a call on the Dow for now, but I think ultimately, we will have higher prices by the summertime. So we will be into probably an all-time high by September, for example, on this thing. So the quicker we can sell down and breach these current lows on the year, I think, the faster we will get up to new all-time highs. And I think, that is justified. We've had everything thrown at us so far. War, resurgence of COVID in the East, in Asia, 5 rate hikes to come, and look at where this market is. It's not down here, right? So, I just think there's nothing that can really sell this thing down, and any massive selling is just going to be a massive buying opportunity, and that's the way we need to look at this as traders. Okay, what else can we look at here? Yeah, oil. Oil on the dailies. Actually, we'll look at it on the weeklies. No, we can look at it on the dailies. But really, there's a resistance area coming in here, like 2010 lows. That's 108.28 to 109.87. I could actually go back here and show you what I'm talking about. If I go way back here, right? You'll see the method in my madness. A lot of people would be like, Tim, that area doesn't matter. Well, it does if you're intraday trading, So here we are in 2010, right? And so we have the low of the day, 25th of May, 2010, and the low of the day, 25th of August, 25th of August, 2010, right? And so just really the point why, the reason why I'm monitoring this is because we have really good demand came in off that low, excess on the lows on that day. Big demand for the weeks that came after. It came back test at this point, and again that demand picked up, and the rest was history after that, driving into pretty decent prices thereafter, right? So again, retest here in 2011, and again a little slip below, but then buyers coming in, right? So that 104.69s is now back adjusted to be back adjusted and updated to be 104.12s, because we're now trading the M22, which is the June 22 futures. So really, I think the market is holding the 104s, obviously, but it's just got a bit of trouble ahead at the 108.28. But ultimately, when it's all done, I think we're going to be trading above there much higher. You can see as we go forward in time, like in 2012 here, again, just that the demand came in, and again, the following year, 2013, so really, this is a big area that only then broke down in 2014. And of course, that was really to blame on the glut left over from the shale revolution. So look, that's what I'm looking at on oil. I think buying on pullbacks is definitely warranted here. It's pivot support today. Um, yeah, that's it. Right, for gold, I'm not really enamored with gold because while we are trading now above the 2000 marker, right? I mean, yeah, look, it's fantastic. Gold traders, good luck to you guys. I mean, I think we are generally, I have this thesis that we are trading in this massive bull flag, right? So these are weekly bars, right? I think we're generally trading in this massive bull flag. All right, so we are going to trade up here, and I think we're going to break out above the 2080 area, right? Just getting Libyan shutdowns on production in my ear on the squawk right now. So let's have a look at oil. We're not seeing a bid on oil right now, so not a big impact. But yeah, look on gold. I think targets to the upside are going to be way up here actually. It's going to be 2081s, and then we'll probably spend a day or two pulling back here, finding buyers, and then breaking out above. Do I think the macro environment is forthcoming for that? I do actually. I do. As much as I might slate gold as a product to trade, that's only because I got burned on it a lot last year, and it just didn't really behave that as it normally would have. Um, it was a very low performing asset last year, to be honest. But that really is the only reason why I haven't been trading that much gold. But I think I'm kind of going to get warmed up to gold again, looking to mainly be buying this thing on pullbacks over the next 4 weeks, to be honest. And I think we can have some significant prices. The French, of course, actually had a headline over the weekend. The French, of course, pulling in all of their gold from foreign reserve. So they are saying, "Hey, we have gold over there. We want it back on French soil." So something is afoot for governments wanting the gold dust back in their vault. All right, so yeah, on the euro, before we came on here, we were talking about the euro. If I just go back onto say monthly bars here in the euro, given we have interest rate cycle coming forth, I think the dollar is just going to wipe everything out. Like so it's just not going to be prudent to be looking for major long term longs in the euro, and I think we are going to be actually getting back down here onto like 2001 prices. That's 1.06560 on the downside as the target. Of course, that's the high of the month of September 2021. All right, so stick that one in your analysis machine, but I think that's what's going to happen here. And we have breached and started to look for that. So if we go back to the small 60 minutes, you're seeing a bit of a line in the sand here. Supports generally on the 1.08435s. We're now below, testing its resistance. I think generally this whole area here, you got a resistance, a whole bubble of resistance here. So um, let's just monitor that as we go forward in time. So, all right, that's going to be it for me for another pre-US session. Listen, I hope everyone has a good Easter, and if you do anything this Easter, you got to click the like and subscribe on the YouTube video. Apart from that, I'll be talking to you during the week, and yeah, don't eat too much chocolate. Bye bye.